Hey there, this is Jim Phillips. I want to talk to you today a little bit about something that is near and dear to my heart. It has to deal with wealth management or wealth management companies. You know, since I've become of age, meaning I'm eligible to go to these old people events where they tell you how to invest your money in preparation for the future. And then they will tell you stories about, you would put it in a trust and things will be fine. Now, all of that sounds extremely good until you start to peel back the onion and find out what is actually happening. Now, I'm not disparaging financial advisors in general, but there is a characteristic in financial advisory work that has become evident to me as rather unseemly and very distasteful. And it's the part where, if you would take a look at their, this one is an example provided by Creekmer, is that you have wealth planning, you have investment management, and then advanced planning. Now, all that sounds good. All that sounds really, really good. But what's lacking is what happens in the end. Now, this is critical. All you old people, you figure this stuff out. What happens in the end? Let's say you're a single person. You've got a number of investments. You're working with this particular company, and your money is being diversified through a variety of tools and products that are available in that company. And you've been good enough to be able to have a trust, and this information, all this stuff is in your trust. And then you've even been smart enough to be able to have beneficiaries either identified individually or the trust collectively as the beneficiary. Now, all that stuff is done. This is done. And you pass away. Let's say you identify one of your family members. You're single, of course, but one of the family members, a niece, a nephew, a brother, or sister, as a trustee, and they're willing to take on the management of the trust and closing of the estate. Still all good. What is lacking, and what is the painful observation that I've had to make, is this. There's nothing in that circle that indicates how they will help your trustee close those products so that you can have them consolidated into the trust. Nothing. Nada. Once you die, all that is up to your family members to figure out, or the trustee who is a family member. Not them. They don't help at all. And this is really dissatisfying, because my experience has been, I'm sorry, kind of like, you're dead, so we're done with you? Well, what about the products you sold me? Well, you have to go to the individual product itself and follow their death process. I said, you're not helping? No, we can't help. In this one case here, that's what was Creekmer said. We can't help. We're told, kind of a corporate decision, that we no longer do that. And so it seems to me somewhat of a disingenuous service to say that you're all lovey-dovey in the beginning when my money is good, but when I want to be able to, when I finally give it to my family, and you're suddenly, well, hold it a second, we can't do that. We're going to divest that responsibility to you, because you've had the good sense to die without telling them, and not put these things in a proper perspective. So the takeaway is this: when going to a financial planning meeting, we're talking about a meeting or a dinner that they talk about this stuff, ask this question: upon my death, who will help my family member close these accounts so that they can get their money? There may be an incredible silence because they'll talk about having beneficiaries, but they won't tell you how to get them. Now, here's an interesting caveat, sort of the ending note. They will, in this case here, they will in fact help you if you choose to leave the money in their company. Now, that's rather self-serving, I would say. All this time you've said that this is for your family, that whatever it might be, and you die, and then they say, well, you're on your own. But if you leave it with us, we'll work with you. Oh, what scoundrels they are. This is horrible. Now, I don't know if that's the total industry. I imagine it is, because helping to close these types of accounts are challenging. But I would suspect that with the knowledge they have, they could help immensely make this process easy for the estate of the family member who had passed away. But when they choose not to, all they're saying is that your money's no longer good. The longer you can keep that money in play with them, that is more money they get off of their management fees, regardless if you're dead or alive. So when you take the money away, they no longer get money, and they also have no more, dollars under management, by that firm. So this is really kind of a sleazy way of being able to keep the money a little bit longer and not help the customer in the end, the client in the end. So I hope this has been helpful. It's been helpful to me, and very experiencing this pain has been really a challenge. But for you, I'd like you to know where the gap is. And the gap is after death, will they help? Not just lip service. What is the substantive help that they will provide to your family members or the estate upon your closing? I hope this is helpful. You take care. Make sure you think about yourself and what these people take from you, because you're paying money for them to manage your stuff. What are they going to do at the end when you're gone? Are they going to abandon you? This one has abandoned us. Thank you. You take care. God bless. And until next time, this is Jim Phillips. I'm out.